Welcome back. It's not raining, but we talked about water. Don't let it into your house. And if you do, then you're going to have problems. Boyce Goff is back with us. Boyce is a great friend of the show. He comes on all the time, joins us, kind of our resident CPA here. And, first, welcome back, Boyce.
Thank you. It's a lot of fun to get over here and do this.
Yeah, well, we love having you. And I mean, truly, you have about as much tax knowledge as anybody has accumulated. Which is a lot of tax knowledge.
No, you're not getting a free tax return next year, Ben.
Dang it.
Flattery will get you almost everywhere.
Well, boys, a lot of people don't go get their tax returns done professionally because they do want a free tax return. It's kind of how people operate. Now, people maybe just file. And now, looking back, some people might be worried about an audit. You actually talked about the fact that people are maybe more prone to be audited if they do file it themselves.
Well, I'll give you a very good example that we're just wrapping up with one of our clients. We did their personal tax returns a couple of years ago, and they were a Schedule C, a sole proprietor. They thought our fees were a little expensive, and so they said, well, from now on, we'll just do it ourselves. And so they filed their 2008, 2009, and 2010 tax return. We just finished up auditing them and defending them in front of the IRS from the returns that were prepared by them. I think our fees right now for the audit is about $20,000, and the IRS is just ripping them up. Now, is some of it justified? Yes. Is some of it unjustified? Yes. But people forget that the purpose of the tax laws is not to be just, not to be fair, but it's to collect money, and that's what they do very, very well. And that's what we have them there for, because if we didn't have them, we wouldn't have the streets and the airplanes and all that other stuff.
The airplanes, boys?
Well, the airports. And
airports. Okay.
Airports and everything else that we have out
Air Force One, maybe.
Yeah, Air Force One. Or two, or three.
Two or three.
Anyway, but from that standpoint, that's what is there. But the thing that happened with this particular client is she went and bought TurboTax. Now, TurboTax is a good product. Just like anything else, every tool is a good tool. I mean, if I went out and bought a chainsaw, as long as I used it right and know what I was doing, I mean, I wouldn't try, but Gary would probably give me a lot of instructions on how not to use a chainsaw.
Gary looks like a chainsaw guy, doesn't he? He definitely owns a chainsaw.
Or a sawzall or something like that.
He's over there nodding his head. Yep, chainsaw, got one.
Yeah. And it's one of the things I learned a long time ago. My father says, well, why don't you get a book and learn how to work on your car as opposed to reading something like Shakespeare? And I said, Dad, I want it done right the first time.
Yeah, no kidding. Isn't that the truth? It's kind of the premise of the whole show.
Yeah.
So let's get into this. You want it done right the first time.
Right. So you go out and you buy something like TurboTax. The problem is put W-2s and some interest and dividends on it. But once you go beyond the complicated stage, or once you go beyond that easy stage, you get into some complications. And so people read the rules or they read the internet and they go, oh, well, I know the answer to that, but they don't understand the nuances and what really is what the IRS is trying to accomplish and things like that. So as a result, they end up putting things in two different places. Like this individual had health insurance on their Schedule C, on the Schedule A, and on the front of their tax return. Well, the IRS said, thank you very much, and adjusted them all, So that's some of the things that you run into is people who are trying to read a book and understand it. Not saying that they shouldn't do it, but the other side of it is like the old Fram filter commercial. You can pay me now or you can pay me later.
It's so true that when you're trying to learn something and do it at the same time, your brain doesn't operate the same way. You're kind of like a little bit fuzzy. And then when you know how to do something, you just do it.
Yeah.
And
experience. So some of the things, excuse me, I didn't mean to cut you off there, but some of the things is.
It's your show, boys. Let's rock and roll, buddy.
Well, sometimes, no, I'm just kidding. Some of the things is people don't keep a copy of their last year's return and match it to the current year and say, all right, now, did I get everything that I had last year? Because a lot of times there'll be carryovers from capital losses or charitable contributions or things or investment interest that they weren't able or passive loss deductions that they weren't able to deduct in the prior year. And they don't pick that up. And I see that a lot of times on tax returns that I get. I go back and I look at the prior 3 years' worth of returns, and I go, oh, my gosh, you didn't do this. We have to amend the returns. The other thing is that people don't understand, you got to make sure your Social Security numbers are right. And now.
It seems like something that would be easier.
Well, you find that people transpose numbers and things like that, especially when they're hand doing a tax return. And the IRS right now is pushing harder and harder for everybody to electronically file their tax returns as opposed to being on a hand return or a handwritten return. The other side of it is they forget to include the Social Security number on every page of the return. Well, right then, if your return gets separated when it goes back to the service center, you may not end up with the Schedule C that you're entitled to or something of that nature. And then you're going to get a little notice from the IRS. Dependents. Now, who is a dependent? Who isn't a dependent? The problem you run into there is sometimes people are trying to take dependents that are not theirs, or they forget dependents, like they're supporting their mother and their grandmother, and they're not living with them, but they pay for their elder care and everything else. There's a deduction there or an exemption, so they forget to do that. The big thing that we run into a lot of times is where you've got two parents, which is quite common in today's situation, is that we have two parents that are divorced. And the question is, who gets the kids as a deduction?
I think sometimes the question is way more than who gets the kids for the deduction, but for the purpose of this conversation.
That's what, and who's the head of household and who can do that? Well, that's one of the reasons people forget to do that, or they end up taking them all and they get an audit notice saying, oh, by the way, your wife or your other spouse is the one that took those exemptions and they beat you to the punch. So then you could lose it. If you work for more than one employer, forgetting that, you've got more than one W-2 that you got to put on your tax return. And if you've gone beyond the Social Security limits, then you've got a refund coming of those Social Security taxes that were taken out of your W-2. The other thing is a lot of times people write checks to the Internal Revenue Service and they forget to put on the memo section the Social Security number and what the form is that they're paying. So a client comes in to me and says, hey, I paid this. We check with the IRS and come to find out the IRS has got the money sitting over in a suspended account because they don't know what it goes to.
It sounds to me like you don't want a suspended account with the IRS.
Well, you get your money back or it gets applied. It's just it takes you the time to get there. You might get a couple of nasty notices in the mail before you get there. Taxpayers that, let's say you forget, well, and I know it's a kind of a tough situation, but let's say one of the spouses dies in a situation. People forget that they can still file a married filing joint tax return in the year of the deceased spouse. If one of your dependents dies during that year, do I still get to take them as a dependent? Well, yeah. Okay. So particularly if you supported them for most of the time. The other side of it is a lot of times we get W-2s and 1099s and things of that nature. They've got the wrong Social Security number on it. It's got the wrong name. And so you start putting it on down your tax return, or somebody says, well, that's the wrong Social Security number, so they don't put it on the return and they don't give it to us. And the next thing you know is the IRS sends them a little note and says, oh, by the way, yes, that belongs to you. And please explain why the difference is. Get a state tax return or a state refund. We don't really have to worry too much about that in this state. But if you have taken a tax deduction on your tax return for state income taxes that you paid, which you get a deduction, you have to show that as a refund coming in next year, and you may have to pay taxes on it. Okay? Let's see. What else? Mortgage interest. There's refunds for mortgage interest, but deductions for mortgage interest, but you got to be careful because you can only have mortgage interest up to $1 million, and it has to be for the construction or the original purchase of the house. You can't go in and buy a house for $400,000. Now the market's gone up to, of course, I'm not sure any place that the market's gone up to, but let's say the market's gone up to $1.2 million, and you go out and refinance the house and get $1 million loan on it and you take the other $500,000 and use that to pay off other debts. No, you can't deduct that interest. And so people forget to do that.
So, these are all things that this is not hard for the IRS to catch. These are like the quick things the IRS can go, guess what? You did this wrong, and now you're up for an audit. This isn't, for lack of a better term, this isn't the, hey, I don't know exactly how much I spent on this, so I'm going to fudge a number type stuff. This is, wow, you didn't do this right, and it's glaringly obvious stuff.
Right, because all your 1099s for interest, dividends, stock sales, stock purchases, your W-2s, your 1098s for your home interest and that kind of stuff, that's all reported to the Internal Revenue Service. And they match up your return. It goes through a computer system. It matches it up, and it kicks out a report. Now, the thing about it is people get that, and they go, oh, my gosh, how can this be? This is wrong. And I will tell you 80% of them are wrong because something was in the wrong place.
It's comforting.
Yeah. Well, the problem is it's because the client didn't notate it correctly on the return. So the problem you run into at that particular time is you got to go back to the IRS and explain it. But the other thing is when clients come complaining to me, I says, you got to realize something. When you open up that letter and pull open the letter, that's the first time human hands have touched that letter. Nobody really goes through and compares those and says, oh, by the way, that was meant over here or something like that. So you just have to work with it. So the first thing is don't get surprised if you get a letter.
Well, it's funny because we got a letter saying that my wife didn't file her tax returns, but we filed them together. So you got to go through all these hoops. Now, luckily we had, but
yeah.
It's amazing. You get this letter, you're like, wait a minute, how did I do it? And she didn't, yet we did it on the same one. So it's very strange how these computers will put things together. And granted, I guess if, as you're saying, if everything, all that, I's aren't dotted and the T's aren't crossed, it immediately kind of kicks you into that red flag zone.
You're absolutely right. Or one of the other things is you got to be very careful in today's situation where people are stealing identities. People take a social security number and use it to get a job someplace. It's not their social security number. And, of course, the boss doesn't check it that it's their social security number. And then you come in at the end of the year, we do your tax return. That's for the right person. And we get a notice back saying, oh, by the way, you have all this other withholding and social security payments. And we go, thank you very much, because we're not going to try and find out who did that. So anyway, those are things. It's just good to have somebody. I mean, it's like I tell my doctor clients, would you operate on yourself?
What do they say?
No. Or as an attorney said, we asked attorneys, an attorney who has himself for a client has a fool for a client.
That's right. No kidding.
Anyway,
Boyce, we do have to go to break. Thank you so much for coming again. And it is so incredible to me that people would try to do these things on their own. How big is the tax code now? 4 million pages?
Who knows? I mean, when I first started, it was in three books of Treasury regulations and one code book. And now it probably would fill this room.
It's incredible.
With all the regulations and everything else.
Well, certainly, there's a lot of things I don't try to do on my own, and taxes continues and will continue to be one of them. Boyce Goff from GDC Financial Solutions. We talked a little bit about mortgage debt and the interest deduction that you get there. Well, what if you want to just pay less on your mortgage? Well, if you have an FHA loan, you won't want to miss our next segment. We'll be right back after this break. You're listening to Brashenomics.